Did China grow with no theory? Well, if you can have the most successful economy in the world with no theory, well then all the economics departments in the world, universities, should be shut down because they're a waste of resources, because you don't need a theory in order to grow. The reason that China's economy has slowed down is very simple. The investment has been falling significantly in China. This is hidden by the fact of what is called in economic terms gross fixed investment. That is the total level of investment. But you have to subtract from that depreciation because a certain amount of capital wears out each year. And as China's accumulated capital stock becomes bigger and bigger, the depreciation increases. So the level of investment, gross investment in the economy has remained pretty much the same, slightly over 40%. But the percentage of depreciation in the economy has gone up considerably. That means if we go back to 2007, the net investment in China's economy was about 25% of GDP, and it's now fallen to 15% of GDP. Well, if investment falls by 10%, well, then the economy is going to slow down greatly. Because you have huge confusion in the Western media, which says what from an economic point of view are completely illiterate things. For example, you read in the Western media such things as consumption accounts for 66% of GDP growth. But this is not true. Consumption always accounts for 0% of GDP growth because consumption is not an input into production. If something is an input into production, then it is by definition not consumption. What that really means is that 66% of the economy is consumed. That's correct. But the contribution of consumption to the production is always exactly zero. We don't need to look to try to measure it each year because it never contributes anything to the development of production. And therefore you have a very confused type of terminology on this. Or let's take, again, you read in the Western media, China should increase consumption. Well, this could mean two quite different things. Lurking behind these words is an ambiguity. One could be that you need to increase the living standard of the population. That means its actual consumption more rapidly. This is a very important goal. It makes a difference. If, say, people's consumption goes up by 5% a year, this is much better than if their consumption goes up by 2% a year. But the second thing it could mean is that what you have to do is increase the percentage of consumption in GDP. But that number doesn't matter at all. Nobody eats a percentage. And if you really want to have very, very high percentage of consumption in GDP, then you should look at countries like the Central African Republic or Zimbabwe or something like that, where you can have 90% of the economy is consumed. And these are amongst the poorest countries in the world. And not merely is this confused, but the two things move in opposite directions. One of the recent studies which we published was to show this, is to show that the percentage of consumption in GDP and the growth rate of consumption are negatively correlated. That means the higher the percentage of consumption in GDP, the more slowly the people's consumption is going to grow. So all these Western people are saying China should increase consumption, are actually, by which they mean China should increase the percentage of consumption in GDP, are actually going to lead to living standards growing more slowly in China, because the higher becomes the percentage of consumption in GDP, the more slowly the people's consumption will grow. This is elementary economics. You should know this, after about 6 weeks of a school economics class. But you have completely illiterate economic things which appear regularly in the Western media because they can't really admit to what is the fact of the situation, which is that China has a better economic development strategy than they do. Because that would destroy, myths of Western superiority, white superiority. They can't imagine it. The point is, I've made the point, is that China has not merely outperformed the Western economies materially, that is, it grows more rapidly, outthought them as well. Its economic policies are more intelligent than those of the West. I mean, let's take the ridiculous thing of the so-called Nobel Prize for Economics, which is not actually a Nobel Prize, but anyway, leave that on one side, right, okay? This should be absolutely boring. It should be only the question of which Chinese economist has won it this year. Because China, for the 40 years, has had the most rapid economic growth of any country in the whole of human history. That's not an exaggeration. That's just a fact. Did China grow with no theory? Well, if you can have the most successful economy in the world with no theory, well, then all the economics departments in the world, universities, should be shut down because they're a waste of resources, because you don't need a theory in order to grow, if that case. Now, obviously, China had an economic theory, has extremely sophisticated economic theories, and these are the most successful. So the only question should be which of these Chinese economists is given the Nobel Prize. So instead, what you have is a ridiculous situation where people are engaged in some small field of economics in the West are given this, and the people who actually produce the practical results, which is the economists in China, don't get it. So it's a sort of mad world in which the people who are successful don't receive the prizes and the people who are unsuccessful do receive the prizes. And this is just because of, Western arrogance, capitalist propaganda, whatever you want to say. But it's nuts once you begin to think about the situation. Let's look at what is the exact situation in the Chinese economy today. What is the most crucial question? I think the most crucial question is the profitability situation. This is the biggest problem. There's a lot of discussion about consumption, which is confused. The biggest objective problem is that company profitability has not increased for over 5 years. And this explains many of the trends which exist at the present time. For example, if we take last year, the increase in state investment is rather reasonable, about slightly over 6%. But private investment didn't go up at all. Why not? Because private investment only takes place when there is an increase in profitability. And if profitability is not going up, there's no reason why investment should go up. Look at the situation in the stock exchange. I know recently there was a huge boost in the stock share prices due to the government stimulus, but if we take, let's say, the last 4 or 5 years, it hasn't gone up. But there's no reason why it should. If profitability is not going up, there is no reason why the share price should go up. So therefore you have a slightly peculiar situation whereby a socialist country has to aid its private sector. But the advice which is being given by the West damages the private sector. Because what the West is saying, say the Financial Times, Wall Street Journal, etc., is that China should be increasing consumption. Well, if you increase consumption, particularly by making wages rise more rapidly than GDP, then you will cut profitability. So you've got a peculiar situation whereby the advice which is coming in from the Western media, which is to increase the percentage of consumption in GDP, is actually damaging the private sector within China. And therefore, you have a real situation in which the Chinese government needs to aid the private sector. But it's not in the way that the West says. The West says the big problem about the private sector is that it's not sure of property rights, etc. This is a lot of nonsense, because the Chinese economy, private investment grew very rapidly for a very long time, in which you had exactly the same property rights as you have now. So that's not what's causing the problem. What's causing the problem in the economy is that the profitability is not going up. And this is what should be being discussed in the West. But the reason that it's not discussed is simple, because if you discussed that the real problem that has to be looked at is the question of profitability, then you would be led to the exactly opposite conclusion to the one that what needs to be done is to raise the percentage of consumption in GDP. So therefore, the Western debate is greatly confusing the situation. And you have it's a very paradoxical situation, that what really the private sector needs in China is the aid which is given by the socialist government, and what is damaging for the private sector in China is the advice which is being given by the West. That's a bit of a paradox, but that's the actual situation which we have. If you want to boost company profitability, the fundamental target you need to do is, I would say, that real wages should grow about 0.5% slower than the growth of GDP. What that would mean is, therefore, that resources were gradually being transferred into profitability. This would not be negative from the point of the living standards of the population, because the economy would grow more fast. And therefore, obviously, let's say, for example, if the economy grows at 3% and the real wages grow at 3%, this is not as good as, say, as if the economy grows at 6% and the real wages grow at 5.5%. What's important for people is not the percentage, it's the real increase. So what has happened is that consumption has risen in the economy, and real wages have grown faster than GDP, and this is therefore putting pressure on company profitability. And you're not going to turn around the situation of private investment. China's state sector can invest regardless of what is the level of profitability. That's why the state economy, state investment goes up. I mean, I don't advocate that. I think that the state-owned companies should be profitable, but it could do, in principle, continue to increase investment even when the profitability is not very high. But the private sector can't. The private sector will only increase its investment if its profits are going up. And therefore, there is not going to be a recovery of private investment in China until there is an increase in profitability. Similarly, while you can have short-term boosts to share prices, there will not be a sustained increase in share prices until the profitability of the companies started going up. So it's not the discussion about consumption. This is a confused discussion, utterly wrong ideas in many cases. And anyway, it's not really the central issue. The real central issue in the economy is how to revive the profitability of the companies, because that hasn't gone up for 5 years, and that's what's producing some negative trends. But we've got to be clear, China's economy is still growing at 5% a year. The US economy is growing at slightly over 2%, and Europe is growing at 1% a year. So when we talk about problems, they're relative problems. China's economy is still doing much, much better than the Western economies. That's why all this talk about peak China and economic crisis in China. Well, any Western economy would be, if it grew at 5%, it would be ecstatically pleased with the situation. So is it the case there are no problems in China's economy? No, obviously not. But these problems are far less than the problems in the Western economy. And you have to address what are the real problems, not the fake problems, which is what has been discussed. Most of the discussion, which takes place in the Financial Times or the Wall Street Journal or something, is completely foolish. Now, actually, this is nothing new. My main source of income was I advised companies. And I know how inaccurate the Financial Times or the Wall Street Journal or the Economist are. I made a joke to them, but which is true. I'm very grateful to the Financial Times because its inaccuracy was how I used to make money, which they didn't like as a remark, but it is absolutely true. These companies need accurate information. They don't get accurate information out of the Financial Times or the Wall Street Journal. Therefore, this created a space that if you give them accurate information, you are making money out of the inaccuracy of these newspapers. And it was perfectly possible to make a living like that.